Hi everyone, hope you're all doing well today. I've got 5 stock updates for you guys. Some of the stock updates are good, some of the stock updates are bad, and I'll also tell you about a position that I trimmed a little bit today after the reported earnings. So I hope you enjoyed the video. If you could, hit the like button. If you're not here, subscribe. Let's get started. So the first stock we'll get stuck onto is Sofi. They just reported some mega earnings. But before we do that, just a little shout out. A lot of you guys have been taking advantage of the current Webull offer that is currently going on. I'll post it again in the comment section, but this offer is running between the 19th of October to the 7th of November. So we're getting towards the end of the offer right now, so do take advantage of it while it's currently going on. I'm personally not a user of Webull, but I would say go take their offer up and just go get the free shares that are out there. There's currently the tier 1 offer and the tier 2 offer, as you can see here. The tier 1 offer is about paying out about £45–50 of free shares on average, and the tier 2 offer is paying around about £80–90 out on average of free shares. So it's definitely some free money to go get out there. You can go treat yourself to a Nando's. Link will be in the description for any of you guys that do want to take it up before it does run out on November the 7th. So let's get on to these 5 stock updates. First of all, Sofi, the best one of the day in my opinion. The update that Sofi have just come out with is 10 out of 10. I will probably do a full breakdown of Sofi's earnings on the Patreon. I've not listened to the conference call yet, but from what I've seen from these earnings, they were very good. I'm surprised the stock is not up more than what it is at the moment in pre-market. Saying that, it has been on a pretty good run recently, so maybe a lot of that was priced in, but the earnings in my opinion were fantastic. Very, very good earnings. Maybe the strongest, and they've always been strong earnings, but this is probably the strongest I've seen them do for a very long time. So there was an EPS beat, which I think I said on yesterday's video that I expect them to beat by at least $1 and come in at 0.05. That did happen. Revenue, I said they would come in the 20% range. They did more than come in the 20% range. They came in at 29% range, which is very, very impressive. And they beat by 63 million. That's no small beat, guys. Beating by 63 million on what was expected of 600 million-ish revenue. That's a very, very, very big beat on the revenue side of it. So that was very impressive. And then what they did once again is they did a triple beat because they hiked up the guidance. All the guidance numbers here for you guys to have a quick read of if you want to have a quick read of it. But just to kind of put a few points out of how good this beat was. You can see they said this implies a 22 to 23% annual growth versus the 17 to 19% growth that was expected previously. And for EBITDA, they now expect 640 to 645 million compared to the prior guidance of 605 to 615 million, which is just very, very impressive improvements of EBITDA. I remember I was talking about Sofi stock before the rally happened when it was back in the $6 and $7 range, and I was saying like Sofi is going to get up to very high amounts of EBITDA this year. Like you're talking 600–700 million of EBITDA, and at the time the company was around about like a 6 billion market cap, 7 billion market cap, and I was like, this is growing at like 20% and it's trading at like 10 times EBITDA. That should not happen. That's a very, very cheap company. And I know a few people have a few remarks around using EBITDA as a metric, but I'm saying even with the concerns around using EBITDA as a metric, that should probably not happen. And obviously now we're talking about a company that's a little bit higher than that. You know, it's now 20 times EBITDA, but it was that was the standout metric for me that I was using in the videos and saying it probably should not be around these levels. So yeah, really, really good from Sofi, and it should just help the run that it's currently been on. And we'll see what Sofi finishes the year on now after this earnings report. It'd be really good if it could get to $13. For me, that would be 100% return then. And it'd be really good to have a new member by the end of the year into that club. But we'll see what happens with Sofi. Yeah, really, really good numbers. Really happy with this. On to the next one now, which was PayPal, another one of my big holdings. They reported earnings. The stock is moving up and down a fair bit in pre-market. Sometimes it's down only 1%. Sometimes it's down over 6%. At one point, it was actually down 10% in pre-market. So the stock's moving down a little bit at the moment with the earnings that they brought out. And as you guys know on Patreon, I actually did sell 20% of my position in PayPal after these numbers came out. I sold for, I think the stock was only down around about 1–2% maybe when I did sell, and I did take about a 13% profit, and I just reduced my position by 20% after these numbers that came out. The reason why I reduced my position is because I just didn't think the numbers were amazing. I didn't think they were awful, but I didn't think they were amazing. And when I look at companies, I really want to own companies that have very strong earnings. You know, I'm looking at Sofi and I'm like, wow, so impressive. I'm looking at PayPal's earnings and I was like, yeah, they're okay, but this is like my 3rd largest position now, and I want my 3rd largest positions, or what would be a 3rd largest position, to be bringing out earnings that are like mega. I'm like, wow, this is absolutely amazing. I look forward to where this is going to be. And I still think PayPal could still be very good for the next kind of 1, 2, 3, 4, 5 years. That's why I've still got a very, very big position in them. But I just wanted to take a little bit of profit off the table, a little bit of money off the table, because I was a little bit disappointed, and I thought, you know what, I'm going to balance that out with my position sizing, and that's why I took a bit of profit off the table. As you guys on Patreon know, if you do want to see my live buy and sell alerts, join through the link in the description. But hey, we made a bit of money on it, and obviously I still own a fair amount of PayPal, but I just looked at the numbers, and yeah, the EPS was good. It was a good beat on the non-EPS numbers, which is good. You know, to see the profitability moving up in the right direction is probably the number one thing. You know, let's see that P ratio drop, having more profit to go buy back shares. That's really good. The only concern I had really was around the guidance and also the revenue. I thought the revenue guidance of like 6% was going to be quite conservative, and they would come in like a 7% growth, and it didn't. It actually missed, and I was like, it's great that they're growing profitability, but we also want to see revenue being dragged up from PayPal. And at the moment, I just think 5% isn't great. It's okay, but for me, that's like a company that trades around 20 times earnings, which PayPal currently trades at 20 times earnings. So at the moment, the upside's getting a little bit less limited if they only grow 5% a year. I think if they're going to get to what I thought they were going to do, like 25 times earnings, they need to grow 8-9% a year. And right now, obviously, that's not currently going on. And I thought also the guidance was conservative and they missed, which was the worrying thing. The other thing was like the Q4 guidance here, revenue growth of low single digit. I was a little bit like, that's not what I want to see. You know, once again, I wanted to see like 8-9% revenue growth in Q4, and low single digit is a little bit concerning for me on those sort of numbers. I guess you could look at the EPS side of it and say like, oh, the non-GAAP EPS is still going to grow in the high mid-teens, but at some point I want to see a little bit more growth in this, and just because it doesn't have it, I just thought, you know, I'm going to reduce the position slightly on this one. I'm still confident in it, but I just thought the weighting that I had in the portfolio to these numbers and where it's currently valued at now, it was a little bit disappointing from my point of view. So compared to Sofi, I was like, I'm loving Sofi's earnings. These were 10 out of 10s. I mean, I've still got to listen to the conference call on PayPal, and go into it a little bit more detail, and I'll cover all that on the Patreon for you guys over the weekend. So my opinion might change slightly on it when I do go into it a little bit more detail, but just from the headline numbers, I was just like, it was okay, but it's not excellent, and I wanted excellent numbers. I felt like Q1 earnings were good. I felt like Q2 earnings were good. I even thought last quarter's earnings were good. This one I thought was like a step back, so I reflected that in the portfolio with a bit of a reduction in the position here. And yeah, overall, like, I want to see PayPal bringing like 8, 9, 10 out of 10 earnings, and I felt like this was more like a 6 out of 10. So yeah, that's the decision that I made there. Next one we have Yugo. So Yugo was up 10%. I covered this on the preview yesterday. I said that I think they're going to bring out some good earnings, and that's what did happen. Yeah, really good numbers, positive outlook, and you're looking at the stock now and you're thinking, why did it just, you know, obviously we had the profit warning, and then we had a trading update saying, actually, it's not as bad as what we thought it was, but yet the stock continues to downtrend, and now we've had a bit of a, you know, pop up again on the share price, and it's like, well, we're actually still at the same levels as where we were at basically with the profit warning, even though it's now higher, the guidance after the profit warning. It doesn't really make sense why the stock is still this low. So I might actually buy some shares in Yugo actually in the next kind of couple of days here. I got to say, you do look at it now and think, well, you know, they've upgraded the guidance once again on the stock. You know, why did they potentially give such a bad profit warning out? Maybe that would have saved the share price a little bit. But yeah, I'm thinking of maybe buying some more into Yugo after this update here. You know, the long-term guidance, they said, is still where they expect to be, and if we look at analyst numbers here, we're expecting to go from 258 to 328 to 388 million on an EPS point of view and a P ratio. That means we're going to be about 14 times earnings on this year's numbers. If they do hit 2025's numbers, it's 11 times earnings for a company growing over 10%. I think that's definitely a very good value there for Yugo, and also you do pick up a little bit of a dividend. So I will be tempted to buy some in here. The only thing I'm kind of waiting on is the budget on Wednesday. There's been a lot of UK stocks that I want to buy at the moment. I've been really trying to buy like Warpaint, trying to buy like Gaming Realms, and I've been buying, but I want to buy it a lot, and I've already bought, but I'm a little bit worried that I don't want to buy too much, and then the budget that comes out tomorrow is absolutely awful, and then I can get the stocks even cheaper. So I've kind of positioned myself where I'm happy if they do go up, but also if they do go down, I'll be happy to go buy them. So yeah, I want to buy Yugo. I'm just waiting for tomorrow really before I do pull the trigger on it, but I am there with that one. And next one, this is a shout out to Neil on the Discord. I'm covering this one today for you, Neil. I'm sure you guys on the Discord page will know who Neil is. VF Corp, wow, I've been looking at this one for a while and I've never pulled the trigger on it, and it's having a great move in pre-market, up 19%. And it was a stock that absolutely got whacked from 2021. I mean, just look at how much it's been down here. But since the lows in about May time, it's had quite a decent rally out here, out of the lows since May time. And you know what? I was made aware of this. I never pulled the trigger on it. And I keep thinking, do I buy this stock? Do I not buy this stock? I mean, the thing that really put me off buying like VF Corp is that I actually went and bought Lululemon. But the problem is with Lululemon now is that after I bought it, the stock has rallied up a lot as well since that time frame. So I'm up a lot on my Lululemon position, and for me to buy more Lululemon, I would like it probably like 30% lower. So I went with Lululemon originally because I thought this was like the best kind of apparel stock that was getting hurt. Every apparel stock was getting hurt out there. But I went with Lululemon. The problem is that's rallied up as well, and I'd ideally want to get that 30% cheaper to buy any more of that one. So then it kind of leads me to the point of view where, is there any more apparel stocks out there that I'd like to go buy? Because I think there's a lot of opportunities out there in that kind of fashion space at the moment. VF Corp being, one of them. The recent earnings came out. They had a nice EPS beat, as you can see here. The revenue was still down 5%, but they beat on the revenue side of it. And I look at the brands they have, they've got the North Face brand here, the Vans, Timberland, Dickies. These are some like really nice brands that they've got here at the moment, and I feel like these brands will bounce back in the future. And I do like the look of VF Corp for that. And you consider how much that stock has been hurt now from the likes of 2021, and how much that stock's actually down since that time frame. Is it still a buy? And I look at the company here, it's 6.5 billion market cap, and if they get anywhere close to where they used to do in profitability, maybe 2022 is not a good year to be using. Let's go back maybe to like 2014, 2017. This company historically used to do nearly 9% profit margins, as you can see here, 1 billion of profitability. If they get anywhere close to 1 billion profitability on a 6.5 billion market cap, this stock's going to do really well going forward. The problem is it going to get there? And at the moment, they're getting better, but there's still a lot of signs of weakness. And I'm surprised the amount of people that are coming in and buying this up already when the results haven't fully recovered yet. I was like, that's really brave of them. But I do feel like this company can bounce back with these brands here. The only big thing that really puts me off buying this one is the balance sheet. The balance sheet is ugly. 5.9 billion of debt. And they nearly got the amount of debt to a market cap, which is horrible. Granted, they do have a decent-ish cash pile of 639 million. And if they do get to 1 billion profitability, they can pay that down pretty decent. But yeah, I just don't know about this one. I keep thinking, buy it because the brands will turn around. If they even get to 500 million in profitability, they should do quite well. But I don't know. I keep thinking about that one, and then I keep looking at something like a Burberry as well, and I look at Burberry and how much that's being beaten down as well, and even that's having a bit of a bounce up. But I'm looking at Burberry and I'm thinking, these buyers that are coming in, and there's not even signs that they're turning it around just yet. The numbers still here are quite weak from Burberry at the moment, and people are coming in and buying it. The difference with Burberry is that the balance sheet is a lot better. They've not got as of an ugly balance sheet here, but same again, if they get to the point of view where they get to, let's say 300 million in profitability like they historically did on a 2.8 billion market cap, this stock probably should double up from here if they do get anywhere close to there. So yeah, I think there's opportunities in this space. It's just trying to find the right one, and I keep in between a couple of them, and then I change my mind. So yeah, let me know what you think. Is there kind of a apparel play that you're playing at the moment? Obviously the one that I went with was Lululemon, but that's rallied up a fair bit. But I don't know, is there another one that you guys think are the ones to kind of go for? Because these two do look interesting to me at the moment, so I don't know, we'll see what happens there. Anyway, that's the update today, guys. Like I said, a few stocks on here, some good, some bad stocks, or some bad reports, and let me know what you think about them as well in the comment section. Apart from that, I'll probably see you tomorrow when we end up talking about the budget that happens. Thanks for watching, guys. See you in a bit.